Welcome to the Investors Trading Academy Economic Calendar of the Week. Each week our news analysts review the upcoming economic events that you should be monitoring. The US jobs report ended what was a relatively unexciting week for the markets. We have seen a move upwards for FX pairs like the Great British Pound and US dollar and the Euro and US dollar, partly on dollar weakness, but the European Central Bank meeting this week will provide the key point for which investors were waiting. The focus will turn back towards the Eurozone as the European Central Bank's Governing Council meets on Thursday to decide on policy, with analysts increasingly expecting further stimulus measures that will come amid heightened debate over the potential for banks and lending to the economy to be impacted by negative interest rates, although a deflationary environment, zero or positive interest rate mean real or inflation-adjusted rates in fact rise when the price levels falls. Key to the ECB's decision-making perhaps will be its judgment on how long-lasting the current downdraft in oil prices might prove. Was the collapse in oil futures merely the result of Saudi merely accelerating the medium-term decline which was in store courtesy of the US shale oil revolution, speak of disruptive technologies, or was it something altogether more transitory? Over the weekend, China's National People's Congress met with analysts likely to keep close tabs on the magnitude of any fiscal policy stimulus which Beijing might unveil. China's new 5-year plan should also include details of officials' infrastructure investment plans. The week kicks off on Monday in the US with employment trends report and consumer credit data. Analysts expect consumer credit to have lifted by around $19 billion. Federal Reserve Vice Chair Stanley Fischer also delivers a speech, the last major speech by a Fed member ahead of the March 15-16 rates decision. On Tuesday, the National Federation of Independent Business, NFIB, issues its Small Business Optimism Index, while the usual weekly data on chain store sales is released. In China, trade data is issued on Tuesday. While both exports and imports are down on a year ago, most focus is on imports as a measure of domestic spending. The trade surplus is at record highs. On Thursday in the US, the monthly budget data and the usual weekly data on claims for unemployment insurance are issued. In China, the focus is on the February data on consumer and producer prices. Producer prices are still in decline, down 5.3% over the year, and consumer prices are rising at a modest 1.8% annual rate. Further tame inflation readings would leave the door open for more stimulatory measures. On Saturday, the monthly batch of Chinese economic indicators are released: retail sales, production and investment. Chinese economic activity is decidedly mixed. Production and investment growth are slowing while retail sales growth is firm. Expect annual retail sales growth near 10.7%, with the production near 6% and investment near 8.5%. The risk is that the results print on the weaker side of expectations over the next couple of months, especially given that a lot of business would have closed for Chinese New Year celebrations earlier in the month. Indices continued their grind higher, with March starting in a relatively bullish fashion. If Mario Draghi delivers, then we could see these gains accelerate, with the rallies that started as short covering maturing into something more sustained as equity fund flows start to turn around.